Alright, so again, good morning and good afternoon and good evening to all of you. Alright, my topic for today is all about financial management of cost of capital. Ano ba ang ibig sabihin ng cost of capital? What do you mean of the weighted average cost of capital? Okay, let's begin. So, cost of capital as defined in your book, particularly in your review materials, particularly in your um, uh, textbook, it is a rate of return that are necessary to maintain the market value of the firms or the price of the firm's stocks. Ano ibig sabihin? Yan yung return natin. By the way, dalawa yan class ha. It is either you are an investor or you are the users of capital. Investor, it is part of your interest income. If it is naman users of capital, it is your interest expense. Yan ang ibig sabihin ng cost of capital. 'Di ba class? Go back to the basic, no? Ano bang ginawa natin? Particularly in computing for the present value. 'Di ba? Yan na yung rate na ginagamit natin in computing for the present value of one or the present value of ordinary annuity of one. And that is the cost of capital. That's why managers must know the cost of capital as the minimum required rate of return. Sa ibang libro, tinatawag tong minimum required rate of return. And it is to be used in your capital budgeting, in helping the optimal capital structure later. Uh, my focus is more on the optimal capital structure, and then we will compute for your cost of capital. And the last one, ito yung ginagamit natin in computing for the present value of the lease payment. And that would be your leasing, bond refunding, and your working capital management. But before that, we go first with each cost. And that would be your cost of capital, your cost of debt, your cost of preference shares, your cost of ordinary shares, and the cost of retained earnings. And that would be yung tinatawag nating weighted average cost of capital. Again, what are the components? Dalawa lang naman yung class. Cost of liability, cost of debt, or cost of obligations, or cost of debt. And the other one is the cost of equity. Ano yung mga equity natin? Tatlo yan. Cost of preference shares, cost of ordinary shares, and the cost of your retained earnings. Sige, one by one tayo class, no? But before that, again ito yung kanina na diniscuss ko, no? There are two cost of capital uh, uh, point of view. Cost of capital's point of view. If you are the users or if you are the investor. Kaya lang, syempre, business is combination na of users and investors. Ano bang ibig sabihin ng users? No? It is the amount paid to suppliers of capital for the privilege of using their funds. And that's your interest expense. Okay. How about your investor? Return generated and obtained from the users of capital, and that would be your return. If you are the business naman, combinations na ng users and investors. The cost of doing business and the return generated for employing the capital. So we are more into the user's point of view. Although we are also part of the business point of view then. Okay. So, in computing for the individual cost of capital, again, ako lang gumawa nito, no? In KI, KD, KP, ako lang gumawa niyan. K stands for cost, I is interest. KD, D is for debt, no? K, cost, preference, uh, cost of retained earnings, or R dapat to, cost of equity, and the cost of overall cost of capital. Sige. We go now to this one, no? In computing for the individual cost of capital, no? Very important is your KI. KI here is the before tax cost of debt. Please take note of this. In computing for the cost of debt, we will compute for the net of tax. If you notice, KD is equals to KI is equals to 1 minus T. And that would be after tax cost of debt, where T is your tax rate. You have KP as the cost of preference shares or the cost of preferred stocks. We have your KS, the cost of retained earnings. KE is the cost of external equity or the cost of issuing new common stock. And we have KO as the firm's overall cost of capital. Okay, please take note of this. Ito yung gagawin natin for the next slides. No? Okay. We go first with the cost of debt. Ano ba ang formula natin? Okay? Again, first thing is to compute for the before tax cost of debt. And it can be found by determining the internal rate of return or the yield to maturity on the bond cash flow. What would be your formula? The formula here is KI. Again, cost of interest is equals to the interest plus market value. Sorry, M, not market value, sorry. M minus V divided by N divided by M plus V divided by 2. Sorry, but before that, we go first to consideration. Okay. Again, sorry. We go first to this one. Sige. Balikan natin yung mamaya. In terms of the cost of debt, please take note. Very important consideration is interest. Interest expense. Kung ikaw ay may negosyo, dalawa lang ang gagawin mo. It is utang or debt financing or equity financing. Plus, please remember, in debt financing, pag tayo ay nangutang, what will be your consideration? Paying for interest. Okay? Paying for interest. And the interest is part of your income statement. Therefore, interest is subject to tax. That's why cost of debt is subject to tax. And computing for the cost of debt, it should be net of tax. While the preference stocks, preference shares, ordinary shares, retained earnings, the consideration is paying for dividends. And the dividends is not part of our income statement. Therefore, they are not subject to tax. Again, cost of debt, subject to tax, while cost of equity like preference, common, or ordinary, and retained earnings are subject to tax. Please take note of that. Debt is for interest, equity is for dividends. That's why, class, in this formula, if you observe, no, is you have an interest here. Kaya lang, we need to compute for M is the par value, usually the 1,000 bonds, and you will minus the value of the net proceeds from the sale of bonds. By the way, how do we compute for the net proceeds of the bonds? And that would be the market value minus flotation cost minus underpricing cost. Sir, ano po yun? Flotation cost and underpricing cost is the cost of issuing shares. That's why you are issuing shares to this one. Okay? And that would be your V, and that would be your net proceeds. Again, what is the net proceeds? Market value minus flotation cost minus underpricing cost. Flotation cost and underpricing cost is the cost of issuing your shares. M is par value and usually 1,000 bonds. What is N? N is usually the term of the bonds. So, divided by M plus V, ganun din. Kung magkano nakuha mo sa numerator mo, same pa rin. But you need to compute for the average. That's why divided by 2. Again, what is the formula? Ki is equals to I plus M minus V divided by N and divided by M plus V divided by 2. My question, ito na ba yung ating answer? The answer is no. Why? We need to multiply it by the net of tax. Ito yung class ang reason kung bakit. Since the interest payments are tax deductible, the cost of debt must be stated on the after-tax basis. It is part of your income statement kasi. And the after-tax cost of debt, therefore, the formula here is KD is equals to KI to be multiplied by 1 minus tax, where KI is before tax, cost of debt, and T is tax rate. Class, kung magkano na compute mo dito, just multiply it by 1 minus tax, and that would be your KD. Okay? So far ba naintindihan? Hopefully, yes. And this is the formula. Okay? Next one. Ay, sample tayo. Sample. Cost of debt, assuming that the Carter's company issues a 1,008% 20-year bond whose net proceeds are 940. The rate is 40%. Then the before tax cost of debt is KI is equals to I plus M minus V divided by N divided by M plus V divided by 2. 2 here is constant because we need to compute for the average. Alright. So, magkano yung interest? 1,000 times 8% times 12 over 12. That's why it is 80 pesos. What is M? M here is usually the par value, which is 1,000 par value. So, 1,000 yan. Minus 940 given na. Net proceeds is 940 divided by ilang taon ba ito? Recover. Or sorry, not recoverability. The bonds is 20 year. Divided by kung makano nakuha mo sa M and V, just copy divided by 2. And the KI here is how much? So 83 numerator, 970 is your denominator, and you have you have 8.56. So 83 divided by 970, 8.56. Yan na ba yung answer natin? Hindi pa po. We need to compute for the net of tax. 8.56 to be multiplied by 1 minus 0.40, and KD here is 5.14%. Class, please take note. Please remember the 5.14%. Bakit? Mamaya, relevant yan. It is relevant in computing for the weighted average cost of capital. Okay? So, hopefully, class, tandaan nyo yung 5.14. Next one. Next one is the cost of preference shares or the preferred stocks. The cost of preferred stocks, KP, is found by dividing the annual preferred stock dividends, DP, by the net proceeds from the sale of the preferred stocks, P, as follows. What do you mean of this, class? Okay? Ibig sabihin, the preference shares is you need to consider paying for dividends. And it is to be divided by the net proceeds. How do we compute for net proceeds again? Market value minus flotation cost minus underpricing costs. And that would be your P or V kanina. No? As long as it is the net proceeds. Since the preferred stock dividends are not tax deductible expense, kasi nga, the dividends is not part of your income or part of your income statement, hindi siya kasali. Since the preferred stocks are not a tax deductible expense, these dividends are paid out after taxes. Consequently, no tax adjustment is required. Kung magkano nakuha mo sa KP, yan na yung answer natin in KP. No need to adjust for the 1 minus T. Okay? Hopefully, class, naintindihan ako, no need to multiply 1 minus T. Alright. For example, suppose that Carter Company has preferred stocks that pays 13 pesos. Malamang yan na yung ating dividends, no? Peso kaagad. Okay? Usually, class, may mga time based sa percentage, no? And sells 100. What is 100? Market value. Flotation cost and underpricing cost is 3. That's why minus 3. 100 minus 3. What would be your net proceeds? 97. So 13 minus 97, you have 13.4. What is 13.4? That would be your cost of preference shares. Okay? May question, sir. Yan na ba yung answer natin or you need to compute pa for the net of tax? Yan na po yung answer natin. Why? Dividends is not part or it is not tax deductible, not considered as part of the income statement. Okay? Alright. Next one is all about cost of equity capital. there are three kinds, no? The cost of common stock, KE, is generally viewed as the rate of return investors, no? Okay. So, there are three kinds or techniques. Gordon's growth, capital asset pricing model, and the band plus approach. Okay. We go first with the Gordon's growth. If you notice, parang same lang siya kanina. KE is equals to D. Kaya lang ito ay D1, not D0. Okay, kanina is D0. Dividends today. Ito naman ay dividends projected. Divided by P0, value of the common stock, which is usually the market value minus flotation cost minus underpricing cost because you are issuing shares. And plus G, what is G? Rate of growth assumed to be constant over time. K is equals to D1 divided by P0 plus G. Okay. For example, assume that market price of the Carter's company is 40. Market price agad yan. Dividends to be paid at the end of the coming year is 4. Dividends expected, that would be your dividends per share projected. Not not today's dividends ha. And the expected growth rate is a constant rate of 6%. That's why you have 6% additional. Then the cost of this common stock is KE is equals to D1. Given naman yung D1, 4 divided by 40. What is 40 here? 40 here is your market price. Wala po tayong flotation cost and underpricing cost. And you will add G percentage. Okay? Class, may question. Ito ba yung ating answer? Ha? The answer is yes. Yan na po yung ating answer. No need to compute for the net of tax because it is part of the equity and the dividends is that part of the income statement. Therefore, not subject to tax. Okay. Next one. Ito class. What if there would be flotation cost already? Assume the same data except that the firm is trying to sell new issues of stock A and that is your flotation cost of 10%. D1 is equals to P0, 40 to be multiplied by 1 minus 0.10 and that would be your flotation cost plus 6%. You have 17.11%. Plus, if you notice, if there is no flotation cost, mas mababa, 16%. If there would be flotation cost and underpricing cost, you have 17.11. Bakit? Because of the formula, we deduct kasi flotation and underpricing cost. Okay? We have also here the capital asset pricing model. Class, hopefully, ito ay familiar pa sa inyo. When we are in risk and return, di ba? CAPM model, if you notice. And this is the CAPM model in computing for the cost of equity. Okay? So, CAPM approach, an alternative approach in measuring the cost of common stocks is to use the capital asset pricing model, which involves, number one, we will estimate for the risk-free rate, and that is RF. What is again is the risk-free rate? Risk-free, walang risk of your investment. Okay? Estimate the stock's beta coefficient. Go back to my video about risk and return. I've discussed there about beta coefficient wherein beta is to measure only your systematic risk. Again, beta, you will only measure systematic risk. What is systematic risk? Market-related risk. Hindi po kasali dyan ang unsystematic risk. Ano dyan na? Which is the index of the systematic or non-diversifiable market. Okay? Alright. Number 3, estimate the rate of return on the market portfolio. Yes. Magkano ba yung rate of return natin? And 4, estimate the required return on the firm stocks using the CAPM or SML. Ano SML? San Miglite ba? Hindi. security market line. Okay? Security market line. Irisan mig light ha. Okay. So, for example, class, in the CAPM approach, assuming that the RF risk-free rate is 7% and your beta is 1.5 and the market return is 13%. Okay? So, KE, RF is 7% plus beta of 1.5. RM is 13% minus risk-free rate of 7%. Magkano ba ang ating, how much would be your return? Or cost of equity 16%. Okay? And this 16% cost of common stock can be viewed as consisting of 7% risk-free rate plus 9% premium. 9% premium, risk premium. Paano makompute ng risk premium, class? RM minus RF. And that would be your risk premium, which reflects that the firm's stock price is 1.5 times more volatile, no, from the market price or the factors affecting the non-diversifiable or systematic risk. Okay? All right. We have also here the bond plus approach. Ano naman yung bond plus approach? Another simple but useful approach in determining the cost of common stock is to add the risk premium to the firm's own long-term debt. For example, K is equals to long-term debt rate plus you have your risk premium. Ibig sabihin, class, just add the long-term, which is kanina, KI is equals to 1 minus tax, and magkano yung na-compute mo in terms of the risk premium. Okay? And that would be, pero ito class, bihira itong gamitan. Yung dalawa lang, the Gordon's growth and the CAPM. Kaya lang, syempre, I want it to discuss pa din, baka mali nyo, di ba? Okay. So, for example, long-term bond rate is at 5.14% and the risk premium is 4%. We assume the 5.14 is already net of tax already. No? Okay? 5.14 plus 4%. KO is equals to 9.14%. And that would be your cost of equity. By the way, class, tandaan nyo yung mga na-compute natin, ha? Please remember all our computations. Bakit? Mahalaga yan later in computing for the weighted average cost of capital. We have 16%, di ba? 17.11% kanina. Okay. Next one is the cost of retained earnings. Ang sabi, the cost of retained earnings of KE is closely related to the cost of existing common stock. Okay? So, since the cost of equity obtained by the retained earnings is the same as the rate of return, therefore, cost of retained earnings daw ay kaparehas ng cost of ordinary shares. Ano nga yung computation natin in the cost of ordinary shares? D1 divided by market value minus flotation cost minus underpricing cost plus G. What is G? Growth rate. Oh, yan ba ay magpaparehas? Yes. If there is no flotation cost and underpricing cost. Makinig class, ha. Tama ang formula. Pero the cost of retained earnings is the formula is D1 divided by market value only plus G. In the cost of retained earnings, there is no deduction of flotation and underpricing. Bakit? The answer is common sense. Ikaw ba ay nag-i-issue ng shares sa retained earnings? Diba hindi? Anong ginagawa mo sa retained earnings? You just accumulate and retain your earnings. Kaya nga, retain and earnings. Therefore, the cost of retained earnings is that dividends 1 divided by market value plus G. While the cost of common shares is that it is the D1 divided by market value minus flotation cost minus underpricing cost plus G. Why? Because in the cost of ordinary shares, you are issuing shares. Okay? Hopefully, class, na-absorb nyo lahat. No? Next one. So, we are done now with the cost. We go now in computing for the weighted average cost of capital. And that would be measuring your overall cost of capital. The firm's overall cost of capital goods with the weights being the proportional of each type of capital asset account. Okay? So, ito class yung formula. Pero I will not discuss this more about this one ha. Meron akong nakita na mas madali yung maintindihan. Ito. For example, bonds, loans, preference, common, retains, and you have capital. Total capital and uh, liability. Saan nakuha yung 30, 20, 10? Mamaya, explain ko saan nakuha. Saan nakuha yung 12.025, 13.585? Iyan yung kinumpute natin kanina. Pero hindi ito ha, hindi pa ito. Halimbawa, you compute for the bonds of 12, loans of 13, preference is at 16, common is you have 25, and RE is you have 25%. Okay? Alright. Ito class, galing yan sa each cost. Just multiply. Pag nakuha mo na class, you add, and the addition here is 2.7 at 17.990. Sorry. 17.990. Alright. Yan. Ito pa, another example. Dito class, tanggagaling yan. Magkano yung bonds? 20 million. Preference shares, 5. Common, 20. Retained earnings, 5 again. Total capital is at 50 million. Okay. Paano class yung ating weights, no? Ito yung class. Madali lang naman. 20 divided by 50, 40% yon. 30, 5, yes, 5 divided by 50, you have 40%. 20 divided by 50, you have 40%. 5 divided by 50, you have 10. Saan nanggaling yung cost? 'Di ba? Ito yung kanina sinasabi ko sa inyo. Tandaan niyo yung 5.14, 13.40, 17.11, 16. Kasi class yan na yung compute natin. Mahirap lang dyan yung pag-compute ng each cost. Okay lang, pag na-compute mo na yan class, just multiply it by the weight. 5.14 times 40%, 13.40 times 1.34, 17.11 times 6.80, sorry, mali. 40% times 5.14%, 10% times 13.40, 40% times 17.11, 10% times 18. Okay? Tama ba? Yes. And that would be, again, 40 times 5.14, cost of bonds, preference shares, 10% times 13.40, ordinary shares, 40% times 17.11, 10% to be multiplied by 16%. Okay? And that would be your weighted cost. Just multiply, just multiply, just multiply, just multiply. You have 2.06, you have 1.34, 6.84, 1.684. Okay? And that would be your weighted average cost of capital. And I think that's my last slide. And hopefully, you have learned, no, on how to solve for the weighted average cost of capital. By the way, the 11.84, that's the time that you will now compute for the present value, and the rate is is closely to the 12%. So again, thank you very much and hope to see you in my next video. Bye bye. Thank you.